The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. I'm Steve Rhodes, host of The Trader's Edge, and thanks so much for joining me. It is Terrific Tuesday. Hopefully you're off to a great start of your day. If you're just waking up with us on the West Coast, good morning to you. Everybody else, good morning as well. And it's just such a pleasure to be here with you, folks. And, you know, yesterday we were talking about, what I was speaking about was the trust, if you will. And when you take a look at, there's nothing faster than the speed of trust. And that's really what this whole week is, I guess will be the theme of the week. You know, and you can see trust everywhere. If you play sports or if you watch sports, you get to see just exactly how trust plays out, you know, and certainly it was a great, hopefully you stayed up late like I did. I'm a little blurry-eyed, if you will. Good news is I took a nap before the game came on yesterday. I don't think it was over till after midnight or so. And then, you know, once you're up watching the game, I don't know about you, but it's not exactly like lights out. And, of course, the markets are trading around the world. The futures are trading. So good reason to just kind of keep one eye on the screen and see what's going on. But, you know, really good basketball game for those of you that enjoy college sports out there. So March Madness going into April. It's over. We got another March Madness, if you will, coming up. That's going to be the Masters. Don't know that it'll be mad, but it's nice that you've got the Masters over the holiday weekend that we have here coming up with the markets being closed on Friday. Gives everybody here in the markets the opportunity to watch that great tournament, and that starts on Thursday. And folks, you know, thanks so much for joining. You know, as I said, the theme this week is really about trust. And as I was thinking through the process yesterday that I was sharing with you, and what we did, folks, is we took a look at, you know, trust has a cost. Trust has the speed of trust. It's got both a financial cost and it's got a psychological or emotional cost. And yesterday, the quick exercise was to take two people that are in your life that you rely upon in order to be able to get something done. And just simply those people that you know you can trust, even if they make a bad decision or a decision that doesn't work out, you know you trusted them to be able to use their best effort, all the tools in their tool shed. You still can trust them. And then you've got the folks that, you know, you just really can't trust them to get the job done for you, whatever it is that you have going on. And then what you're doing is there's that cost. There's that financial and psychological cost that you go through. Well, taking it one step further, if you will, and how I really applied it to the markets is that, you know, there's so much information out there, so much minutia, so much information about scaring folks. You know, on the front page of the money section today in the USA Today, right up at the top said, should investors plan to sell in May? Big article here. I haven't read the entire article. Maybe I did. It looks like maybe it was just the front page. And, you know, tomorrow I'll bring out some of the charts there where I go back and I take a look at the historical sell in May, go away, come back in October, November time frame. And we'll take a look at it. But here's the thing, whether you buy into that, whether you believe that, regardless of how well it works, what I want you to be able to do is I want you to be able to trust yourself, because when we take a look at technical trading, there are signals that will be given out here if you need to go ahead and sell. Absolutely signals. And whether you're a long-term investor, you know, we'll take a look at that. I've shown folks that just simply by going back and taking a look at the Dow, you know, going back in this case here, I went back on Friday, I believe it was, to 1994 time frame. So there are absolutely signals out there, and you don't just simply have to go based on an old adage. Absolutely, May 2nd of last year put in a market high. Our markets are back up, in some cases back up over those areas, but it certainly gave us a signal. So there'll be signals out there, and that's certainly why you tune in here. You subscribe to all the different newsletter services that we have around here. But trust, folks, trust absolutely has a cost. And when I was really thinking about it yesterday, trust is really the new currency. And when we take a look at trust and we take a look at these markets, if you buy into, if you're afraid about the ECB, if you're afraid about the Federal Reserve, if you believe the market is stacked against you and you're not in the market, you're not managing your money, you're not understanding the money game, you're not running this as a business, you're really allowing a currency to just simply pass you by. You know, I've talked about where I believe that when you take a look at the tools that are available to us, the technology that's available to us, it's one of these like once in a lifetime, once in a generation opportunities for you to be able to truly get in on this game that's out there and not have to pay attention to what is out there in the media. That we can absolutely teach you how to read these markets, how to read these charts. Yes, it's a little bit of a foreign language, but we simplify it, make it easy for you, and that's what I'm going to do. And when you take a look at, and here's the thing, opportunities are always around us. And so I'm reminded back, and I've had to use trust so many times. I use trust each and every day. I use trust when I am trading these markets and take a look at patterns. Back in the late, was in the late 90s, I developed a process where I used a subsurface laser etching product. Now, I happen to see these, what these are, folks. These are maybe some of you have even owned it. I've talked about it from time to time on the show here. And I created a process where, with a laser beam, I could actually create a fracture inside a transparent piece of material. In this case here, it was crystal. And take all those little points and turn those into 2D or 3D images. And what I did was, the first store that I opened up was at an Epcot Center in Orlando. And when I created that technology, the technology actually came from the Star Wars program that Ronald Reagan had kicked off. I actually hired the folks that were on the Russian side. I happened to be traveling over in Russia when I saw the product, and then lo and behold, I was always attracted to crystal type products or glass, and lo and behold, when I actually started the developed the business, happened to be with the group of guys, or a couple of guys, that were actually on the Russian version of the Star Wars program. And what they really needed, folks, they needed to, when they had these laser beams, the whole idea was to be able to shoot a missile out of the sky with the laser beam. And the way that you would do that is with being able to focus a certain point of energy right at a specific XYZ point, and there'd be so much energy that would be released there that it would explode whatever it did. Well, in order to really test that out, they used transparent materials to see how accurate they could be in firing to that XYZ point. Well, in my case here, all I was doing was making small little cracks and fractures in the glass. Well, I ended up building those systems when I opened up the Disney location. I ended up building those systems in, of all places, Bozeman, Montana. Now, that's a whole other story. But Bozeman, I don't know if any of you have ever been up there. And as a kid, growing up in Michigan, we did a lot of fishing. I loved fishing, but I never gone fly fishing, and was up in Bozeman, Montana. Had some time. Was taking a meeting with my group that was making these laser systems for me, and I went fly fishing. Now, in order to do the way that I do anything, that when I decided to get into technical trading, I immediately hired Tom to teach me. Immediately hired Larry to teach me. I've developed a great relationship with David. He has taught me so much, and so I've learned that you can either do things by trial and error, or you can go find masters out there and model yourself after them. To me, that's the fastest way to accomplish anything. And so I went out and I hired a guide, a very, very good guide. Took me out to the Yellowstone River, I believe it is, in Bozeman, Montana. And a beautiful day, beautiful sunny day, just like it is here in Florida. And we get out into the water, and the first thing that he says to me is, so what do you see? Steve, tell me what you see? And I said, well, I see the trees, I see the rocks, I see, this beautiful, and he said, no, what do you see right now in front of you in the water? I looked down and I said, I don't see anything. And my guide comes back and he says, you don't see anything. There are all kinds of fish swimming around you. So I look back down. No, there aren't. He hands me his polarized lenses. Now, at that point in time, I just had sunglasses. I didn't know anything about the sunglass business, if you will. Hands me a pair of polarized sunglasses. I put those glasses on, look back down, and sure enough, there are fish swimming all around me. Just because you don't see something, folks, doesn't mean that it's not there. And you only know what you know. And so just that one little lesson, just that one little thing of going out and going fishing, if you will, and being able to utilize a tool, which in this case here was a pair of sunglasses, realize that it was always there in front of me. Well, what's always there in front of you are these charts that you trade, the charts with the markets that can give you the information. Nothing wrong with all the channels and the news that is out there, but what I want to be able to do is teach you so that you can have the trust You can have the trust in these markets because you see, what I have up on the screen here right now is the ES Mini. And that's one chart here. So that's one chart that's in front of you. And it shows you sacred geometry, swing point, contraction, expansion numbers. Now, if you took a look at this, some of you, this would be very foreign. But I can teach you how to take that information. Or what I can do is just like if the fish were swimming in front of you, how about if I go ahead and I just delete that chart? Let's just put this chart up here. This is a chart where I've got nice, beautiful green, blue, yellow, purple images. That's assuming that you're watching us here on Tiger TV. And what you're seeing is you're seeing chart patterns. These are Gartley and butterfly patterns that are occurring around you all the time. These are patterns that have a 70% chance of probability that when they do occur, they can show you exactly where they're likely to go to, where the first stop is going to be. These are patterns that certainly they're not taught on CNBC or Bloomberg TV or anything else around there. But these are patterns, just like in my case, the fish were swimming all around me. What I want you to know is there is order to these markets, and these markets have these fish. These are big fish that you'll want to be able to catch, folks, and you absolutely are tuned into the right place to do that. You can also join me at my Master Trader Series course that I've got coming up here next week in Tampa, where I can teach you even more detail about this. That is on the 13th and 14th. Then I've got another session in Boston on the 27th and 28th. But, folks, the fish are swimming around you all the time. All I want to do is hand you my polarized glasses, and that's a beautiful thing, folks. We'll be right back. 877-927-6648.
We're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It is better when we're together, especially on Terrific Tuesday, and we've got a great lineup for you today, folks. After the Money Master show that Tom and I do next, we've got Kate Stalter. We're going out to Santa Fe, doing the small cap roundup. Then we do, as we do each and every Tuesday, from 12 to 1, uninterrupted, commercial-free. We go out to Chicago to Victor Jones for the option hour. And then from 3 to 4, the warm-up band is Ken Shreve for the Tom O'Brien show. So if we take a look at the NASDAQ futures, or just take a quick tour around the markets here, you got the Dow trading off, the futures off about 15, 16, 17 points or so. The ES Mini down about a half a point right now. The NASDAQ futures, which is what I've got up on my screen here, that's up 5 points right now. What's that all about? It's all about Apple. Apple's trading out right now, printing out right in the 628 range. Let me flip over and see what it's actually going out at. You've got 627.48. 627.40. So you're in that 628 range, trying to hit Tom's target of 630. We'll take a look at Apple. I didn't look at Apple yesterday, but you know that is driving the Nasdaq futures here. Nasdaq futures, I said, up. The Russell down about 1.2. King dollar up 12 ticks right now. Gold trading out at 1681. You've got silver off 12 cents, trading out at 32.97. Light sweet crude, well, not really trading down much, 35 cents. I don't think that's going to affect your holiday driving much. You've got the natural gas contract trading out at 215. If we take a quick tour around the world, you've got the DAX trading off 7 points. That's after finishing up quite strong. Yesterday, you have the FTSE down 2 points, so a relatively flat market over in Europe. You go over to Asia. You had the Nikkei finish down 59 points. Now, we took a look at the weekly channel lines in the Nikkei last week, and it showed that it had gotten to the top, couldn't get over it, and on a weekly chart indicated that it should start pulling back. That's in essence what it has done. Over the last couple of trading sessions here, you had the Shanghai up 10 points last night, and the Hang Seng, to round it out, up 268 points, finishing out at 20,790. Again, our call number is 877-927-6648. So we take a look at the NQ here. This is the continuous contract that I'm showing, and you'll see this red channel line here. Really kind of a narrow band, a narrow channel line, a nice angle there. It looks like maybe about 45 degrees or so. I'm not that good on my angles, but take a look at this, how it's only broken out of this channel once. And that break ended up being a false breakout. That was on March 6th when you did move down with some volume. And what you can see is you came up into it 2 days later. You tested it. You finally started to get back into it on March the 9th. You traded right on it on March the 12th. And then with some conviction on March the 13th, you came back inside that channel. You can see that on Friday, March the 30th, you traded really right at it or just slightly below the channel line. You came back up into it yesterday. This morning, what you have done is you tested the bottom of that channel line. You are now up above it. What does that say to me? Well, these markets are going to continue to move up as long as Apple is moving up, as long as the NASDAQ is leading things on the way up. If you pull this down, that would take, it just depends on how many days, but you should get up towards the top of this channel line. And, price projections on that What you could do, let's see, what could we do here? I guess you could go for this longer term, I say, March 6th. So we could go off of an ABC pattern out here. If we were to take a look at that, you'd go over to the bottom of March the 6th, probably your B point, I would say, up here on March the 21st. You'd come down on March the 23rd. That being said, that would take you up into the channel line, into the 2880 area. Here, it would do that, looks like right around April the 9th. Now, I'd have to look at my calendar, but this Friday, so today is the 3rd, Tuesday. So the 3rd, so a week from today would be the 10th. So next Monday. Now, it's kind of interesting because on Friday, it is going to be Full Moon Friday. Of course, we won't be here with you. You'll be catching the archive shows. You probably won't be here with us. You'll be out there doing something, and because the markets are closed. The bond market is open, but the general markets are closed out here. And so, that's the pattern that is set up, and that is in the Qs until you see a break of this trend line, and you'd have to see a break with conviction and then follow through. And what I mean by follow through, folks, I'm talking about if you take a look at March 6th, you did not have follow through on March the 7th. And so that's what you would be looking for. If you take a look at corrections that this has had on its way up, what you're taking a look at, in essence, when this channel began, you had one correction period here going back to December 27th. That lasted for 3 days. Then you had the one from March the 2nd down to March 6th. That lasted 3 days. It's hard to say that this is much of a correction right here. That was maybe this correction was right here, but this is the one that started on March the 27th. That lasted 3 days as well. We'll be right back, folks.
Yeah, it's always better when we're together.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and Forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report, with over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar. The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. You got the Dow trading down 19 points. S&P's off 2. Composite up about a half a point. Small caps down to 1. So leading the charge on the way down at 0.17%. You've got the Dow. If you take a look at what is moving, what is grooving? Well, what's moving, folks, is Apple trading out right now at 629.90. Getting to that 6. Let's see, did it hit 630 here? While we were off the air, it got up to a high of $6.3013. Now, what you did, folks, is what I've got up on my screen here right now is the 10-minute chart. That 10-minute session does not end for another 5 minutes. You've got volume. This thing has got volume in it. It's headed to the moon, trading now up above 630. Just in the, let me just go ahead and switch this to the 5-minute chart here. Now what you can see is just, let me leave it on the 10-minute. So the 10-minute, if we take a look at a swing point that was out there, looks like the swing point on the 10-minute came in at 9:50 a.m. on March the 28th, and it did 1.4 million shares. You know, in the first 5 minutes of trading, you've done 2 million shares out there. Let's just put this on the, I got all different time frames that we can select here. That's the 1 minute time frame. So Apple on its way to the moon. You know, folks, and there are times, there are charts where there really are no patterns that are prevalent that you can take a look at, and that is for sure with me in the case of Apple. There is no pattern out there that I've been able to identify that I can trade. All that I can do is wait for signals from the candles that are out there, because those are leading indicators as well. Yeah, you might be 1 day, 2 days, 3 days max looking for a candle formation out there. But if we do take a look at the daily chart on Apple, candle formation, I will tell you one thing that is important for you to take a look at, and that is the open today. That is this gap. You know, and you can see Apple has had, well, all kinds of gaps. If you just simply go back to the when it came off of the lows back here November 25th, that's where my cursor is at here. Now, clearly, I can say there may be more gaps than this, but certainly there was a gap on December the 20th. You clearly had a large gap on January 25th. As Apple gapped up, you've got several along the route here. This is going from the February time frame, just simply February 3rd. So you got a bunch of small little gaps up there, and those gaps are very important to pay attention to. They also act as widespread. Take a look at this set of gaps here, going back to March the 12th, March the 13th, March the 14th. Nothing but just all kinds of gaps there. You've got another one today. If Apple doesn't trade down into the low or the high of yesterday. Now, what you can also, the candles absolutely do give you information, folks. If you just simply take a look at yesterday's candle on Apple and you take a look at closing at the session high. The session high yesterday on Apple, let's take a look at it, was 618.77 to close at 618.63. That's a beautiful thing. If you're a bull, you want to see closes up at those highs. Today, what do? You gap up and that gap will remain open as long as Apple does not trade down into that 618.77 price point. So, the candles will give you information just as in the case of Apple. Here, it gave you a bearish candle, bearish engulfing candle. That was on February the 15th. That lasted for all of 3 trading sessions. 3 trading sessions, and you can see there was no follow-through on that February 16th time frame. And certainly by it looks like here, let me see, it closed out, or the high, I should say, was 514.26. That was on February 15th. And you got to 514.85, 514, yeah. And so on the February 21st candle time frame, you closed above that bearish engulfing candle, saying, sorry, this is not going to be the end. So I think that the only pattern, the easiest pattern to give you some type of indication, and you want to be paying attention to this, because just as Apple has been able to pull the market up, any significant pullback in Apple will also pull the market down, not just the NASDAQ, but the S&P as well. You got the small caps just turned positive, the Dow down 12, S&P's off 1. Let's take a look at what else is moving and grooving. So in addition to Apple being up 12.5 bucks, up 2% again today, you've got XSXCI, SXX Health, they're up 5% today. That's up 4 bucks, trading out at 78.06. You got Biorad Labs, BIO. That ticker symbol, that is up $11.78. That's up 11%. Let's see, they extended their global sales. Okay, their co-founder passed away. That's not certainly a reason for the stock to celebrate. You got Annie's Inc., BNNY. That is a IPO that came out last week, I believe, on Thursday. We'll go take a look at that during the show. That's up $3.10. That's up 9 bucks there. Medivation, MDVN, they're up 3%, $2.48. You got Cons Inc., CONN, up 12%, $2.10. You got up 11%. You got Solazyme, SZYM. You've got Cena Corp, they're up 2.5%. You've got CVR Energy. They've got a little juice in it, a little energy. They're up 5%, up at $1.48, trading out at $28.68. Express Scripts, they're having ESRX. Maybe we'll take a look at that as well. Or anything else you'd like, you can give us a call at 877-927-6648. Urban Outfitters up. You got a bunch of stocks up 3, 4, 5, 10%. Let's take a look at on the downside, see what we've got. What is grooving? Well, grooving to the downside, you've got Netflix. They're down 3% this morning, trading out at 110.28. You've got Keyhoo 360 Technologies. They're off 70 cents, which happens to be about 3% down. You got Goldman Sachs trading off $1.20. Occidental Petroleum, there's part of that oil sector that is struggling to get out of its way. They're off $1.07. That's only 1%. Mitech Systems, MITK, they're off 11%. That's down $1. Let's see, Mitech Systems comments on USAA patent suit. Well, that patent suits, folks, those are nothing more than holes. You talk about possibly owning a boat, and maybe the boat stands for what, about another 1,000, meaning that when you have to repair it. And so if you think that a boat can be a financial hole, just get into some patent litigation. And I can speak from experience there, folks. That is a huge hole. So that looks like that is what is pulling down Mitech. That is trading again off about 10% this morning. Transocean Rig, they are down $1.21. Union Pacific, they're off 87 cents. Fastenal, FAST, they're off 90 cents. Nothing really big there. The biggest thing dollar-wise to the downside is Netflix. So that being said, you can see Apple trading now towards its session low there at the 627 mark. So let's go in and take a look at let's see what kind of volume issues we're dealing with here in Apple. Let's go ahead and put it on the 5-minute chart. Look at that. Let's see. What kind of candle is that on a 5-minute chart? Let's see. You close out at 940. At 630.98, you open up at 630.98. There you go. You got a little bearish engulfing candle occurring here in Apple. Of course, this is just a 5-minute chart, folks. These candles here are going to have much more relevance if you are taking a look at the daily chart. So let's go take a spin and take a look at some of these stocks that are out there. Let's go ahead and close these windows here. So let's take a look at Netflix first, NFLX. See what that is doing today. Netflix trading down. Looks like it gapped off down just a bit this morning. Of course, we know that this stock has had some major problems. You take a look at this stock because it fell from grace. In July, it was trading out in the 300 range and now trading out at 110.30. That's after bouncing off of some lows put out there in December in the $68 area. And so if you do take a look at Netflix here, let's see where we've got some signs of strength. You've got a couple of them. You had this gap up on January 26th. Did gap up on 22 million shares. As this thing pulled back and tried to close the gap, couldn't close the gap, got down to on March the 7th, pulled back with 10.9 million shares. So you gap up with 22, pull back on 10. And what's nice about that pullback there on 10, folks, is even if you went to the candle on the 25th when you gapped up, that also had 11 million shares. Not enough to push it down. Now what you're going to want to watch on this move down here in Netflix, because it took out a hammer candle from yesterday. I think there are several hammer candles. The next one that it's going to test is the swing point low that's out there. That is on March the 14th. That has only 5 million shares. So at 5 million shares, that's where you're going to get your real next test on Netflix. If you wanted to go long this stock, what you'd want to see is a test of 102.90 on less than 5 million shares, a close back up above it. You know, it's got some in-laws, it's got some brothers and sisters there. That is on the 7th when it did 10.9 million shares. So what would be nice is coming into that hammer candle, rejecting lower price on lighter volume, because in this case here, you would have rejected two areas of lows, and the one that has 10 million shares, well, that would be much easier to reject. What you want to do is you want to do the more difficult test. That is the one from March the 14th. Let's go take a look at BioRad, see what they are doing out there. They're certainly rad today, being up 11%, BIO. That is the ticker symbol there. Now, there's one heck of a candle. And so if we take a look at, let's go see what BioRad is trying to do here, trading up at 114.60 right now. And let's go see what kind of pattern is out here. Now, you've got certainly volume. This thing had a nice wide price spread and some conviction off of the lows back here December 16th. This stock moved up with only 379,000 shares. We're only in the first 15 minutes of trading. You've done 175,000 shares so far today. I just have to clean my glasses here. Let's go put this stock on a weekly basis, see what this thing might be doing here. So what this is doing, it's up and over a couple of resistance areas. Looks like this thing wants to go ahead and trade into the swing point highs here. Let me just pull this back even more. Yeah, it looks like this thing wants to trade into its swing point highs. You know, just looking at this chart here and talking about how the market with regard to sell in May, go away, or selling anything, folks, what you really do want to understand are these candle patterns that are out here. Now, you want to understand, certainly, you want to take a look at expansions of swing points. If we do this just simply on the BioRad chart, never pulled this up in my life, but if we just go from the swing point that it looks like a bearish engulf, and we'll confirm that in a moment. That's going back to May of 2010 down to the low that was put in here on, August of 2010. What we would be looking at is a 1.272 expansion would be in the 122 area. When it made its highs going back to May of 2011, got up into 126. Let's just take a look at this candle here real quickly. This is the weekly chart. The weekly chart on April of 2010, it closes out at 111.69, opens up at 111.84. Now, here is a bearish engulfing candle, folks. Take a look at this week here. It engulfed going back, how many weeks here? It went all the way back into the March the 12th, 10 time frame. So you're looking 1, 2, 3, 4, 5, 6, 7, 8 weeks, 40 trading sessions, perhaps 40 trading sessions that are out there. Let's go to Rich in Orlando. Rich, thanks for calling. Thanks for holding. How are you?
Doing pretty good today, Steve. How about yourself?
Excellent, excellent. Thanks for calling. You wanted to take a look at Halliburton?
Correct.
Tell me what you're doing, what you're looking at, and how I can help you.
Well, two different things. One, I'm kind of looking for some stocks that they're in good positions, obviously, to buy, but then ultimately to write some calls against them.
Okay.
And Halliburton just looks to me like it's setting up. I mean, it's kind of come, it's come down off its high. It looked like maybe it was going to make an ABC down, but it looks like it's actually kind of consolidated here from September, October of last year through now in this $30, $40 range. And it just looks to me like it's starting to shape up, like it might be a good entry level in this area here.
Okay.
I mean, we've got the three bottoms. You got the 2707, and then you got 3024, and now you're at 3202. Consecutively higher bottoms, and it seems like the volume is kind of dried up on those downward slopes.
Okay.
So anyway, that's what my take on it is.
Okay, so that's good. So let's so that's great. The analysis that you just gave to us. So let's just pick it apart together here. Sure, and just try to take a look at it, because if we take a look at just its most recent pattern, perhaps that is out here. The first thing that I would notice when I take a look at this chart is I notice the session from March the 29th, and on March the 29th, you've got a bullish engulfing candle that's out there. So just when I take a look at just some candles that pop out at me, so that is a bullish sign. Of course, you're trading down this morning. You're at the $33 area, and we do know that the sector itself, the XLE, which Halliburton is going to be a part of, is the sector that is struggling the most. Of the 9 sectors inside the S&P, that sector is struggling the most. So what we're also going to want to do when we come back for break is we're going to want to take a look at what is going on inside the XLE. Now, if you just were to take a look at a possible ABC down pattern on this, and you started with the swing point at February 24th, all the way down to the low of March the 6th. And when it does move up, it probably only does about a 0.382 retracement out there. And that 0.382 retracement doesn't even, it suggests that this actually could go down to $30.06. But, Rich, stay with me. We'll bisect it. We'll dissect it. We'll figure this stock out, all righty?
All right, thank you.
Okay, we'll be right back, folks. 877-927-6648. We'll be right back.
Well, it's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
Hi, folks. Turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6648. You got the Dow off 25 points right now. S&P's off 3.5. Composite almost flat. That's because you've got Apple trading up at 628.11. That's up $9.50. We're on the line with Rich in Orlando, and we are trying to take apart Halliburton. HAL is the ticker symbol on that, and so I'm reaching for all my tools in my tool shed. Rich, are you watching us on Tiger TV?
Yes, I am.
Okay, so what I do have up, or in the den, what I do have up on the screen here is the art of the chart. Great software that David White and Tom have created here. And what we are taking a look at here, we're taking a look at this last leg down, and it's hard to read, a little bit hard to read here. Maybe it's easier for you on Tiger TV, but you can take a look at this, what David does called the power law vector indicator. And if you take a look at this last leg down here, going into the February, looks like the February 24th time frame, you've got this calculation that it does. It shows the energy it takes. It takes a look at volume, takes a look at time, and it's got a delta of 8.3 versus on the way up. The energy on the way up on that last leg was 6.9. If you take a look at the last leg down from there, you're looking at 4.9. So it's got more energy right now to the downside. That is using the art of the chart there, and that suggests that there is this possibility that as you pointed out, it's definitely been in a sideways trading range going all the way back to September of last year. Is it making some lower highs? Higher lows? Yes, it is. It's also making lower highs. Now, when you take a look at this going back into the October 4th time frame, that looks like the last bullish candle at the bottom of its move. You had a nice bullish engulfing candle, just like it had going back to the 29th. So 4 trading sessions ago. So if you're even though this ABC should it complete, it's going to have to take out those lows. Looks like the low put in on the 28th is 3202. Yeah, 3202, which has 14 million shares on the way down there. If we take a look at the B point, I'm going to put the line up here on this possible ABC down. If we take a look at the B point here, the swing point is March the 6th, which had 16 million shares. So let's see, as Halliburton was coming down through that area, did it have volume? And the answer is it absolutely did. Not only did it have volume, it looks like you have a little gap. And where I'm going with that, Rich, if you're watching, is this March the 22nd time frame. Mm-hmm. You can see that the low on the 21st was actually 33.85. The high on the 22nd was 33.77. So you gapped down, you came through this swing point or this B point with volume, and until you get back above that March 6th area, again, above that, meaning start trading above 33.81, says this may have more work to the downside. In fact, you had 16 million shares. When you came back up there and tested that, you came and tested with 19 million. You couldn't bust through it there. You tested the following session with 14.8 million on the 26th, and I'm referring back to this B point. You did it yesterday with 13 million shares, so that was 13 million going against 16 million shares. Not enough energy right now on the way up, and I would say that this thing will test that bullish engulfing candle from the 29th, and, very well maybe, from my standpoint, there's not a pattern out here yet that's tradable. Going through and doing some analysis with you to take a look at candles and patterns that are out there, but I would rather be a buyer of the D point or a seller of a D point, and I don't see that here in Halliburton. All righty?
Can I ask you another question?
We're going off the air and we're on the Money Master. Send me an email, steve@tfnn.com.
All right, Steve. Thank you.
Thanks, Rich. Folks, have a great morning. Stay tuned. Tom and I will be up next. Then we go to Kate Stalter and Victor Jones. Have a great morning, folks.
Well, it's always better when we're together.